during today's webinar, I'm sure you're going to have lots of questions. If you do have them, what would be great is if you could put them in the chat for us, and then at the end, Naomi and Pretty will welcome those and hopefully be able to deal with all of those for you. If anything then gets a little bit too more complex, they can take that away from the meeting and get in touch with you directly. So that's about it from me today. So I'm sure you'll all join me in thanking Pretty and Naomi for coming to the rescue basically today, and hopefully being able to shine some light on all these things that are happening. I'm going to pass over to Pretty, who's going to start, and then she'll lead on to Naomi after. So lovely to see you all, and hope to see you again soon. Bye.
Thank you very much, Karen.
Right.
Just want to say thank you to HB Accountants. It's a great opportunity for Lightside Financial to share about the bounce back loan. And I think Naomi, it's a great opportunity for Naomi to share about protection and the importance of that, the power of protection. So just to explain, Lightside Financial, we actually get people out of debt most of the time. So we're a debt resolution company. And normally we're never saying to anybody, oh, go and get a loan. But what we are in the business of doing is understanding the terms and conditions around any kind of credit facility. Because once you know that, then that's the best way to understand how to deal with it. To give you a bit of an idea, we are the debt resolution partner for a national financial education company, Genistar. We also work with police federations, so the Avon and Somerset Police Federation. We're fully FCA authorised and regulated, and we are always excited to work with forward-looking accountancy firms like HB Accountants. So that's a bit about me. That's it. Let's get into what we want to talk about. Now, I hope I can move this along. Right. The bounce back loan. What is it? Who is eligible? What are the risks, and how do you get it? All the crucial questions of what we need to know. Right. So there's a lot of information around all of this stuff that's on the slide is important. The bounce back loan is being provided by the British Business Bank. The British Business Bank is a government bank, but it can't lend and it can't invest, which actually means that this bank then provides the loan to our commercial high street lenders, who then facilitate the loan process. The British Business Bank exists to help small businesses, so what's called the micro economy. And this facility in particular is designed for smaller businesses with turnovers probably in the region of anywhere from, say, £10,000 all the way up to £1 million. So I'm not going to go into what I put on the slides, you can read that yourselves, but what I want to explain at this point is the money is provided by the British Business Bank, which is a government bank, and the process of getting the money is by going to your high street bank, because the British Business Bank lends into the high street. The reason why the government are providing the bounce back loan is because they want to get the economy boosted, restarted, getting businesses bouncing back. So what they've actually done is a quantitative easing exercise. They're pumping money into the economy so that we all start using that money to generate greater business activity in order to, I can't say we're going to stop a recession, but in order to try and alleviate the recession that's coming. So who is eligible? Now, this is really interesting because I think many people are not very clear about it. So limited companies are eligible, but what people have missed is that even sole traders are eligible for the business bounce back loan. So if you're self-employed, running your own business, or a sole trader, you can apply for the loan. It is a loan, it is not a grant. So you do have to pay the money back. If you're a limited company, you can apply for the loan. So there are no negative impacts on applying for the loan, and there are no credit checks when you apply for the loan. And that's quite important because sometimes people get very worried that they won't be able to qualify for the finance because maybe their credit rating has been impaired historically. That's not the case. So as long as you're a business that's been established before 1st of March 2020, whether that's a sole trader business or a limited company, and that you have been negatively impacted by the current situation, you're eligible for the loan. If you have any questions around that, please put them into the chat. Vicky is monitoring our chat, so she will be able to raise those questions later on. But I want to move on to this really, really important and crucial piece. What are the risks? Because yes, you're taking on debt, and debt generally always has inherent risks. And the risk is around, what if you can't pay it back? Many of us are nervous at the moment about, well, you want me to borrow more money, but I already don't know if my business is going to be able to bounce back, survive. You know, should I really be doing this? Well, let's understand the risks. So I'm going to focus first on sole traders because, again, it's not clearly understood what the risks might be to a sole trader, and they are different for a sole trader and they are different for a limited company. So what's very interesting about the bounce back loan compared to any other debt that you take on is what happens if you can't pay it back? What are the enforcement actions that can be placed upon you if you can't pay back the money you've borrowed? To give you an example, if you borrow money on a credit card, so here I have, let's get it one that's valid perhaps, a credit card. I borrow money on that and I borrow more than £7,500 and I can't pay that money back, that lender could make me bankrupt. Even though I've got cash in the bank, I've got a house, I've got a car, I could still be made bankrupt by law if I owe more than £7,500 and I don't pay it back. With the bounce back loan, as a sole trader, if you borrow the money and you're unable to pay it back as per the terms and conditions of the loan, then actually you won't be made bankrupt. Your personal home will be safe, which means that no charges would be registered on your property. Your car won't be taken away from you. What can be done is what's called a payment arrangement. So some way of paying the money back at less than the general contractual terms of the loan. So what I'm saying is, in terms of risk, the risk of borrowing this money, of what happens to you if you can't pay it back, is really, really low. Your home won't be affected, your assets won't be affected, and number three, they won't be able to make you bankrupt. You won't have a CCJ against your name. So what it's really quite fantastic and very unusual is that you're able to borrow the money and have peace of mind that should you not be able to pay it back as per contractual terms, those terms can be varied without impacting your assets. You will have to pay the money back over a period of time, unless you decide to go for a personal insolvency or anything along those lines. But that's not the purpose of this conversation. This conversation is about what is the risk, and what I'm saying is for sole traders there is a risk if you can't pay the money back, but the risk is very, very low. Now, if you operate a limited company, let's think about the risk there. What's very interesting is, let's go back to this slide. As I've highlighted in red, there is no personal guarantee, which effectively means that for a limited company, the directors are not personally guaranteeing this debt. Normally, when you borrow, you always, as a limited company, the directors always have to give a personal guarantee, which means that if the limited company is insolvent, has to shut down, the directors are personally liable for the debt. With the bounce back loan, the directors are not personally guaranteeing the debt, which means they are not personally liable. If the limited company has to shut its doors and cannot continue to trade, then that loan, the bank will go to the government, who have guaranteed 100% of the loan, and receive money from them, as opposed to pursuing the directors for that money. It's almost unprecedented. The government had a similar scheme, which was called the Enterprise Finance Guarantee Scheme some years ago, where essentially the directors were on the hook for 20% of the money. With the bounce back loan, directors are giving no PG, which means if you are operating a limited company, you meet the criteria to receive the loan. In order to try and enable your business to bounce back, it's actually a great option because you're not taking any personal risk. Obviously, everybody hopes your business does bounce back, that you are able to, your company is able to repay that loan. But when thinking about risk, you have to think about what's the risk to me if it doesn't happen in the way that I want it to happen. So, no personal risk for directors. However, as a sole trader, there is risk, but the risk is very low. Really important to understand that. So, how do you get it if you're interested in getting it? Okay, now this is where it has become a little bit tricky for some people. You do require a business account. Now, as a limited company, you are guaranteed you're going to have a business account. So for you, it should be quite straightforward. However, many sole traders or self-employed people operate a separate account for their business, but may not have it set up as a sole trader account or a business account. So the first step, if you're in that position, is to apply for a sole trader account, sometimes called sole trader account or sometimes called personal business banking account. But you will need to have a business account, and that's really important. You can apply to your existing bank to get one. If you're having problems opening one, and we are hearing of a lot of people having problems opening one, mainly because the banks can't do their know your customer checks at the moment, KYC, know your customer check. And so it's slowing down the process, and yet you need the cash now. We do have a link with another organisation who is facilitating that process. They do charge fees. If it's something you need, you can come and talk to me. My number is at the bottom of the screen there, and I will happily put you in touch. But your first thing should be to try yourself, because if you can try yourself and you're successful, the great thing is you don't have to pay any fees and you've got what you needed to get. In order to check which banks are offering the bounce back loan, you can have a look at the British Business Bank website. They have a list of all the banks that are offering the BBL loan. Some banks aren't offering it, and it's only because they haven't got the systems in place to facilitate the application process. So initially, for example, I believe Metro Bank, they weren't offering it. They were going through the processes of getting accredited in order to offer it, but initially they weren't, and so people were getting a bit stuck there. But generally, lots of the banks are offering it, but if you need to check, look at the British Business Bank. If your bank is not offering it, you can go to any other bank and seek to apply for it. If you're a limited company, the application process is very, very simple. You are self-certing all the information. So you put in the information, and then you will tick a box to say everything that you have said is correct. You tick that box, and your application will get processed. So if you're a limited company, generally you are not even having to upload any additional documentation. All you have to do is submit the data, press send, and within, we've heard of cases 3 hours later the money's in the bank. Sometimes it's taking 24 hours or 48 hours, only because they just are processing a lot of applications. So the business bank account, business bank loan, bounce back loan. In summary, I would say if you need it, it's really worth getting as long as you're eligible. Make sure that you've got the business bank account in order to get the loan. Make the application. It's a really good opportunity to ensure your financial safety And I know of many people who are using it to pay down expensive debt that their business has. This debt, 2.5% interest rate, you repay the loan over 6 years, and in the first 12 months, there are no repayments, and you've got some breathing space. So look at your existing loans. If they're costing you more money than that, then obviously you should be considering the bounce back loan. So I'll end there and hand over to Naomi.
Thanks very much, Priti. I am going to share my screen now. So let's wait for that to come up. Great. Well, that was really useful information. Thanks very much. Very insightful. Also, thanks to Karen, Vicky, and the team at HB Accountants for hosting this. So, yep, you've just heard about the bounce back loan. So the risks involved with this, why it's not treated the same as other debt. Now, let's take a look at how you can gain financial security for you and your families, and how you can use that to help avoid accumulating too much debt, too much risk, and ever needing to see someone like Priti in the future. So a little bit about me. I'm a financial planner. I run a financial wellbeing business, so Naomi Haynes Financial Planning. I help people and businesses achieve financial vitality via protection, retirement, investment, savings, planning, and more. So I've worked in financial services for over 20 years, and just going to talk to you today a bit about protection. So on this slide is a famous quote from Benjamin Franklin. What it tells us is that we can't predict the future, but we can prepare for it. So I'm going to chat to you about some of the statistics and ways you can protect yourself, your loved ones, and your businesses against building up too much debt. So, what if something unforeseen were to happen to you? Could you manage well financially? Well, 46% in a global survey said that they could not. What if you had health concerns? How financially prepared are you? 41% in the same survey said that they're not financially prepared to meet health concerns. Now, remember, the biggest asset you have is yourself. Despite this, chances are people will insure their pets, travel, and belongings above themselves. So just a little bit more about some policies. So income protection is an insurance policy that pays you an income if you're unable to work due to illness or injury. So whilst a lot of companies pay sick pay, these tend not to last for long periods of time, whereas income protection policies can be put in place to last until retirement. A lot of self-employed people don't have any income if they can't work. And life insurance pays out when someone dies. So 8 in 10 people that have a mortgage have no income protection in place, while 4 in 10 don't have any life insurance. So what would happen to those people without income protection if they were to fall sick? Or what would happen to the families of those without life insurance if they were to die? Some more stats. So household savings have been reducing over the years, meaning people have less cushion to fall back on if something unexpected happened. So in 2016, 35% of UK households had no savings. And those that did have savings, the average was a mere £1,205. So savings are not the solution for most. So I want to quantify the risks, and I'm going to do this by creating a fictional couple. I've called them Jane and Phil, but I'm just going to refer to them as we go. So they're each age 45 and they have no insurance in place. So maybe they assumed it was too expensive, but they're worrying about their financial security. They have a joint mortgage and they have children. So what I've done on this slide is I've run a calculator to look at the possibility of them running into trouble. As you can see, there is approximately a 1 in 3 chance that each of them could have one of those unforeseen events happen to them. So let's go through those events. 29% and 23% risk that they will be unable to work for 2 months or more before they reach retirement. Income protection can help prepare Jane and Phil for this. It's something they can keep until retirement if those 2 months extend long term or recurs and happens more than once. So what that means is that Jane and Phil can keep payments up on their mortgage, they can buy food, provide for their children and so on without adding stress to their already suboptimal situations. They can then continue to reduce their debt burden whilst even contributing to perhaps a pension and preparing for the future. So the next risk, 9 and 12% risk of suffering a serious illness. Now, if Jane and Phil have already got income protection, they know that if they suffer a serious illness, their monthly expenses should be covered, but they may need to pay medical bills, make adjustments to their home, or just want added financial security with funds to pay off their mortgage. Critical illness cover pays out lump sums of money if either Jane or Phil suffer a serious illness. This means they don't have to worry about repaying their mortgage or any other debts when they're dealing with their health. And then the next risk is a 3 and 5% risk of death if Jane or Phil were to die before the mortgage is paid off. Could the survivor pay off this debt on their salary? So, would the survivor and kids be able to afford everyday living expenses? Life insurance can help provide dependents with financial security in this case, without the need to worry about paying off the mortgage or how to maintain their standard of living. Term assurance can be matched to payments on their mortgage, meaning the survivor is not left with 100% of the debts, but 50% of the income or less. A family income benefit can help with everyday living expenses, childcare costs, school fees, much more. This is basically life insurance paid out on a regular basis until usually children are no longer dependents. If Jane and Phil did not have adequate protection to help them in any of these situations, they could end up with mounting debt, needing to move home, perhaps change children's schools, reduce their standard of living, and all at a time of significant stress. They or their loved ones may end up building too much debt and needing to see someone like Pretty. So what this next slide shows, it's a map. It's a great way to identify some of the times during our lives when insurance can help prepare us for unforeseen future events. We've covered some of these stages already with Jane and Phil, but Jane and Phil also run their own business. So let's look at businesses. Jane and Phil are going to ask themselves some more questions. What would happen to their business if one of them or their shareholders suddenly died or was diagnosed with a serious illness? Would there be business disruption, loss of important business network, erode potential profits? So key person protection can help cover this. But also, is their business able to repay debt if either of them or a key employee died or left the business? Now, overdrafts can often be overlooked when you're looking at protecting business debts. So many companies rely on an overdraft facility for working capital, and they can find themselves with that overdraft facility withdrawn on the departure of certain people from the business. So it's worth knowing that and how business debt protection can help cover this and other debts. Now, business protection is important whatever the business setup. So limited, sole trader, partnership, LLP. Basically, it's very important. So just to give you another statistic, a research report in 2019 by Legal & General found that 52% of small and medium-sized businesses would cease trading in under a year if a key person died or became critically ill. So it's important to think about our businesses when we look at our own financial security. What repercussions would there be if Jane and Phil's business were to fail? Were they hoping it would provide for them in retirement? Have they saved enough elsewhere to compensate if their business fails? How would they pay their living expenses, mortgage, bills, everything? Many business owners risk their own personal wealth as security for borrowing. So would this be an added risk for them? And how would they pay the costs to wind up their business? So yet With all of this, more than 50% of businesses have absolutely no cover in place. So there are lots of options, and depending on the setup, there can also be some tax advantages. You can also set up other policies, so like life insurance, critical illness cover, private medical insurance, and income protection for yourselves via your businesses. So let's look at retirement now. Going back to Jane and Phil. So in retirement, they may still have some debt outstanding. We already know how they can use protections to avoid this and hopefully have paid off all debt before retirement. But also their retirement savings may be in a combination of pensions and their business. Did you know that most pension schemes will not be counted as an asset in the case of bankruptcy? So when Pretty talked before about case of bankruptcy, if you have pension assets, in most cases, those cannot be claimed back. So just some useful information. Now, lifetime mortgages have been increasing in popularity for over 55s. So people have been using these to repay interest-only mortgages or even to fund their retirement. So question, do you want to leave something behind for your loved ones or have some ability to access more money if you need it? This is just another way of accumulating more debt and more risk. Private medical insurance, that can also help with potential medical bills, particularly as you get older. Now, there are policies out there that do not hike prices and become too expensive after you've become ill and claimed. So once covered, premiums will rise in accordance with inflation, with your age and your postcode. So the younger and healthier, for example, Jane and Phil are, when getting a policy like this, the less expensive it will be to cover medical bills in later years. So I've posed some questions like, what will happen if unforeseen circumstances arise? Or what happens if you die too early? But what happens if you live too long? Could you run out of money and build up too much debt? So Jane and Phil want to make sure they have no outstanding debt and have built up retirement assets enough to help with the rising costs of retirement. So you can see how protection can help avoid the accumulation of too much debt, can help keep your business going and give peace of mind to you and your family. So are you and your family financially secure? Bear in mind, the older you are, insurance is usually more expensive. The poorer your health, again, insurance is usually more expensive. So can you afford to wait? Thank you.
Thanks, Naomi. Thanks, Pretty. We've had a couple of questions come in. I don't know if you can see your chat boxes, both by email. The first one I'll read out says, I'm a sole trader and use a personal bank account for my business because it's free. I have been declared bankrupt in the past. Would I be eligible for a bounce back loan?
Sorry, would you mind just repeating the question again for me?
Indeed. It says, I'm a sole trader and I use a personal bank account for my business because it's free. I've been declared bankrupt in the past. Will I be eligible for a bounce back loan?
Okay, so as long as you have been discharged from your bankruptcy, you are eligible for the bounce back loan. So if you're still in your undischarged period, so that's usually the 12-month period post bankruptcy application or bankruptcy order being made, then you won't. But if you've been discharged, yes, you're eligible. However, you do need to get a business bank account, so a sole trader account set up in order for you to be able to make your application. Because you're running it from a personal bank account, it doesn't preclude you from applying for the business bank account. And that's the bit that you need to do in order to then get the bounce back loan.
Okay, that's brilliant. I'm recording this, so I'll be emailing the recording over. The next question, have been knocked back on the application for the bounce back loan after 35 years with the business account at the same bank.
no KYC check has been performed. Can I get around this?
Yeah, you definitely want to get around it. I can see it's awful, quite a horrible situation to be in. I would definitely say talk to your relationship manager at the bank, have a conversation, go through the KYC process, which is essentially just verifying your ID. And I'm sure you do know that, but just to put it into the recording. But I would be knocking on the door of the relationship manager and saying, I need your help.
Super. I haven't had any other questions come in. Does anybody else have a question? You'd be more than welcome to unmute yourself. Oh, one may have just come in. Thanks, Mary. Are there any downsides to getting the bounce back loan if the business doesn't need it? I'm aware of a sizable business who have received £50,000 and have put it in the bank just in case.
Mary, that's a great question. And my response is, I don't think that there are any downsides in putting it in the bank just in case. I actually think it's an upside because right now we don't know what the next 6 months is going to bring. We're all really hopeful that we have ridden out the storm, you know, that the peak was flattened, that we're not going to have a second spike. I think everybody is feeling really hopeful that that's not going to happen. However, none of us actually know if that's the case. And right now, we are at the brink of the beginning of the economic tsunami, and we don't know how bad that's going to be. So I would be thinking that I can't see a downside risk apart from if you've got the money sitting in the bank and then it's wasted foolishly. But that's a different kind of conversation. So I would be thinking that it makes absolute sense to have it just in case. And remember, if you don't need it, if you pay it back in month 11 or 12 of having had the money, there are no early repayment charges. You won't have paid any interest on the money. So actually it's cost you nothing to almost have bought yourself the protection of having £50,000 in the bank. At least you've got it should you need it.
Do you want to say anything, Mary?
Yes, thank you so much for that really eloquent answer, Pretty. It seems to me there isn't a downside, and my question is, can you, if you did take out that loan, or if the business did, because it really surprised me that the particular business I know went for it, but they were advised accordingly, but can you pay it back in one lump sum in month 11 or 12, rather than having to stagger those payments over, I think you said 5 or 6 years?
Yeah, absolutely. You can pay it all back in one go. So, and the beauty of it is no early repayment charge, because generally if you're bank borrowing and you're paying it back earlier, many contracts will have, well, hey, we're really upset because we were banking on earning our income from you taking the loan out. There is nothing like that here. So yeah, no early repayment charges. Pay it back in one lump sum, no problem.
Thank you.
Does anybody else have any other questions? You'd have to unmute yourself if you did, or raise a hand. No, I think we may be done.
No, Claire's got her hand raised.
I've got my hand raised. I've
I'm
unmuted.
really sorry, I missed your hand.
Can you hear me?
Oh, yeah, we can hear you. Who's your question for?
Okay, we've been knocked back on this bounce back loan, and we went to the CEO of our bank to find out why, because we had absolutely no idea why that should be. We've been with our bank for over 10 years with a business bank account. We have nothing against us, nothing we could think of. They have found that there were marks against us, and apparently we're not the only people to have this, and they've been told to remove them. So I'm going to reapply this afternoon. But what my question is, if you're in a situation like this, where for some reason you have been turned down, how can you find out what those reasons are? Because as far as our business is concerned, it is solely on the reputation of my son, who is a speaker, and an author. His reputation is absolutely vital. And we have absolutely no idea why this has happened. So how do we go about finding out, because we said we can't possibly apply anywhere else until we know what's happened. It appears that there's some, I don't know if we've been hacked or somebody has just gone in and put something on there that we don't know about, but hopefully that's now been removed. But, this is a credit thing. So what do we do about that?
Okay, so there have been some hiccups, if you like. Yours doesn't sound like a hiccup, but just to put that in there. You can request from the bank data that's held on file with the bank under the general data protection requirements. You have the right to request information that's held by the bank. I'm not sure if it's just for limited companies. It's certainly definitely available to personal individuals.
We're a limited company.
I'm not sure if I think GDPR will in this instance still apply, but basically you have the right to request data that the bank holds about you, so the limited company in this case. They have 8 weeks to respond to that request. So you can put that request in writing to them. You have to put it in writing to them, and then they can respond. And what you would want to say is that you would like all data that the bank holds regarding your account. And if the bank wishes to speak to you about it, then give them a number so that you can have a conversation with somebody about it. It sounds like they're going to be removing the marks that have been on the account. So that's good news for you. One thing to just be mindful of, those are going to only be internal to the bank. So they're not necessarily going to appear, a limited company has no credit file as such, so they won't be in the public domain. So from a reputation perspective, I think perhaps you have less to be worried about. And sometimes the bank will put markers on a file. So to give you an example, they have been waiting for some know your customer type of information and they haven't received it, and it will just be a marker that there's something missing. It's a bad thing. It's just that the bank are saying that they needed something and they haven't got it yet.
They asked me for some information for their records a while ago. They said there was no rush, no hurry. They were happy to wait for it. But I completed it, and I got a reply back from them saying, thank you very much, that's great, we've got it all. Then yesterday I had one from them, I don't think it's anything to do with the bounce back loan, just saying that they wanted some further information, which is fine, but it all seems, they say that it's just to keep their records up to date and they have to do it by, government. So
yeah, I know, I think it's frustrating. It's frustrating, especially in the current situation. But I would say don't be alarmed by it, don't be perturbed by it. Do what you need to do. And I think you seem to have taken all the right steps. And to give you an example, I was assisting somebody to apply for the bounce back loan. Just couldn't make it happen. Luckily, I do have contacts directly into the bank. So instead of being in a 2-hour telephone queue, I can get in touch with somebody straight away. And I spoke to the gentleman, it was Barclays Bank, and he said to me, Pretty, okay, the problem is because you've got your client's got 2 business bank accounts with us, not 1, and we have a glitch in our system at the moment. Having said that, they sorted it out within 24 hours. Now, sometimes it is about who you know as well as what you know. So that was helpful. So I would say what we have to be thankful for is that all of this has been implemented. It's been implemented really quickly. When you're hitting snags, Claire, it sounds like you did absolutely the right thing and you're overcoming those snags. So that's brilliant.
Brilliant. Okay, thank you very much.
Thanks, Claire. I hope that answered your question, Mark.
I think we might be coming up to our time. So I just want to say a huge thank you to Pretty and to Naomi. I mean, so much information in there, so much stuff that we really ought to be thinking about. Bounce back stuff, obviously really relevant right now. The protection side of things, we obviously advise all our clients to be looking at that. So you know, if anyone has got any questions, you've got everybody's details. If for any reason somebody hasn't got details or they can't get hold of anybody, you know, get hold of Vicky and she will pass on all the details to everybody. We have recorded this because I had a couple of clients who were supposed to be logging in and I noticed they haven't. They're probably snowed under with a million other things like the rest of us. So we will be sending that out. So if you do know anyone else that would like a copy, please do just get in touch. That's it for me, I think. Happy Friday. We haven't done one on a Friday before. So everyone have a lovely weekend. And as always, any feedback's hugely appreciated. And thank you once again to our speakers. It was really great. Really,
Thank
really
you.
good. Thank you.
Thank you, HB.
Bye.